Good morning, everybody. Welcome to another Daily Market Bar brought to you by Mike Bjork. Today is Thursday, June 6th. Hope you guys are having a great day. We do got a few economic news to go over today. We'll start off, of course, the second day of jobs numbers, which is the weekly jobless claims. So last week we had 215,000 people apply for unemployment. Forecasters calling for the same number at 215,000 for this week. And it came in slightly higher at 218,000. So the month of May, we actually had a pretty low number in terms of weekly initial weekly jobless claims. So this is another reason why a lot of people kind of disregarded yesterday's ADP number because they think that we're going to have still be in the range of 190,000 new jobs created with the BLS's or Bureau of Labor Statistics data for tomorrow. So be prepared. We could have some volatility, especially if it comes in much short, kind of like the ADP number, but we'll have to wait and see. Now, the next two, we got some revisions. We'll have the final revision here coming up here pretty soon. So anyways, we got the productivity for Q1. We had 3.6% in the productivity. We figured it could slow down a little bit down to 3.5%, and it came in a little bit slower than we expected at 3.4%. And then the other item here is the unit labor cost for the first quarter as well. So it was initial one came in at 0.9% drop, and forecast will call for a fall of 1.1, and it actually fell much lower than that at 1.6. This could be good in the terms that it could keep inflation lower in terms of labor costs, as that could tend to, when you see increases, tend to increase inflation. So this is another item here that we're seeing inflation lowering a little bit. So let's kind of jump ahead to news, headline news. Stocks were up a little bit earlier. They were hoping to try to have a third day of gains, but it's kind of slowed down. It's becoming more of a risk-adverse sentiment with the investors. We got the ECB came out. We're starting to hear some dovish talk from Fed members or central bankers out there. ECB came out and announced that they're going to just keep basically their interest rate at minus 0.4%. So if you have a savings account, you're paying versus receiving interest through basically the 2019 here. So they're trying to do what they can to stimulate because things are slowing down over there. We had the dovish talk from our own earlier this week with Powell and Bullard. If you watched the previous recordings, we did talk about how basically they were, with the tariff talk and the potential slowdown of our economy, they are watching that, and they seem to be receptive of actually cutting rates this year. So there's talk that could be maybe one or two this year, rate cuts. Trade talk. President Trump had reiterated that he doesn't think the talks are progressing enough with Mexico or fast enough. So those tariffs could be starting on Monday, so that's raising the anxiety a little bit with the investors. So we could be kicking in our tariffs on Mexico on Monday. China, also things are kind of still at a standstill. He's still talking about adding on the $300 billion of goods, adding the tariffs on those. That could be handed down to him after the G20, possibly as soon as after the G20 meeting at the end of June, around June 29th, which takes place, I believe, in Japan. So again, those are just kind of adding to the anxiety to these investors out there right now. So let's see how this is playing out in the bond market, how it's affecting interest rates. So far, we're up about 5 basis points. Not quite enough to give us an improvement in rates, but it's a good start to kind of start the day off. We did start off kind of in positive territory on the stock market, and it kind of turned negative as I was creating this report. It could continue to improve later today and get price improvement, or we might see that improvement coupled with tomorrow's numbers as well. So let's wait and see. But right now we're up 5 basis points. Again, good start to hopefully finish up the week here. And yields, we're down again. We're down to 2.10 now, basically. So we were at 212, 211. Now we're down to 210 here on the yields here. All right, so that pretty much wraps things up. Our rates are about the same as what we left off, I would say, unchanged from yesterday. And I hope you guys enjoy the rest of your day. Thanks for watching. Catch you guys tomorrow. Bye-bye.